and welcome to another episode of the Market Pulse series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about what are the current events impacting the markets today, as well as for the week. We'll try to understand the key market developments, where the markets are headed, and potentially understand where the market might be headed. At the same time, we'll also be doing some form of technical analysis in trying to understand the current market structures, current price levels, and understand the various momentum as well as consolidation zones. So welcome to the session. As always, you should know that this is not investment advice. It's not a recommendation to trade, and you should always do your own due diligence, your own analysis, and practice proper risk management. So on today's session, we have quite a number of things to go through, including the key events that happened last week, and then try to understand the key developments before we engage in trading. So once you join in, let's say hi, the live comment section, and this will confirm that everything is working just fine. All right, let's get started. I'll be starting by focusing on the current developments, and this will be in comparison with what we covered early in the morning. And this was during the market snapshot episode, where at 11 a.m. we covered what was currently happening in the markets and tried to understand the key market developments. The first asset that we saw was the dollar index. So we talked about the dollar index range that happened yesterday as well as early this morning. And we decided, or I decided, that if the market was to break this yellow rectangle, either to the upside or the downside, then that give us a market direction. So eventually, later in the day, the market pushed up, pulled back downwards, and then eventually broke towards the upper side. And now, as you can see, the price has come back at the yellow rectangle or to the range that was happening yesterday. So as a result, this has contributed quite a number of things. So one of the charts we discussed was the USD/JPY. The USD/JPY currency pair managed to make a break out of this trend line, retest, and then higher. So during the morning snapshot, we talked about the market potentially breaking this particular resistance. So the market had made a very strong bullish momentum. This was during the Sydney as well as the Tokyo sessions. Then from the London session, the market struggled a bit and then eventually broke, carried all the way up. And this is the current price. It seems like our analysis area was correct, and we maintain holding these buyers that the market may continuously push higher and eventually get to our target of 151.697. So this was an interesting move from this level, and we could eventually get to understand once the price gets to this other area. So hello, Malombe. Hello, Willibet. I'm assuming that everyone can. Now your mic is off. Thank you, Malombe. I think this was good. Good feedback. Hello, Caroline. Thank you for your response. So the other asset we talked about early in the morning was the major currency pairs. So we talked about the potential for dollar strengthening once it gets at this area that was highlighted in yellow. So unfortunately, the market did not get there, but the idea was correct that once we get evidence of bearish entry, and I think this was sufficient evidence, seeing this set of red candlesticks, then it would indicate that the market has exhausted the bullish momentum and now may be headed back lower. So the target was to go for a position that would go all the way down. But in late this evening, we have seen the market take a turnaround. And as the dollar index had strengthened for a while, we are seeing this move backwards, which is also being reflected here. So the euro is now regaining some of the losses it had made at the end of the day. Then 3 bearish candlesticks is sufficient for you at least to squeeze in some good number of pips. For pound USD, we're expecting the same market to hit resistance, then drop back downwards. Then, as you can see, the price action we had was clearly indicative of a reversal, and this was a nice entry point for a short selling position. So, similar case for USD card, we had highlighted that this area is nice and is evidence of bullish momentum. So from here, the market rallied, didn't quite get to target, but immediately changed and moved back to this particular trend line. So for gold, I think this one we were on point. We estimated that the price would eventually drop towards this particular trend line. So it did play out as expected. Go to a smaller time frame. From the 15-minute chart, we saw a slight drop, reversal, and then eventually the market dropped and didn't quite get to target. But if you caught the short selling position, then that was nice. So as you can see, there was a spike here. Then immediately the market reversed and dropped towards this trend line. Didn't get there and made a reversal. So it has been a crazy wild day for price action traders. And for AUD/USD, I think this was pretty clean. So after getting to this area, there was a sharp spike downwards, indicating a strong entry of sellers. And if you capture this, then the market continued moving down. And I think it's a reasonable move from this area, go for a short selling position. And remember, the target was the week's low. So potentially dropping to this area, but now we are seeing some form of reversal happening. So for the US 500, we expected some drop here. The market didn't drop much, so the drop basically led to some further bullish momentum. And now for the Nasdaq, we are seeing yet another high, higher than yesterday's high, and this could continue being the theme today as the Nasdaq cruises into newer all-time highs. So for the Dow Jones, there was a slight drop. The market went back, retested yesterday's high, and then made yet another further drop. So clearly, multi-directions. Let's say go for a short, market goes up. If your short stop loss is too tight, you get kicked out, and then the market moves along the way. But then clearly, this was a top, and the market was unable to form another higher high. So in this case, the expectation is that the market continues moving along that direction. So in this case, the overall estimate is that the market may potentially break this lower trend line and now start creating what we describe as a correction. So the new trend line is now along this road here, incorporating the most recent lows. So we could be expecting some further drop, especially when you consider the 4-hour chart is indicating a big burst of momentum. So you can see the tower formation, market going up and then forming what looks like a sideways momentum with low volatility, and then an immediate reversal with high volatility. So if you view this as a traditional English gate, then you would understand this castle formation. It's not a tower, it's more of a castle formation. So in this case, if the market was close here on the forward chart, then this would be confirmation of a potential reversal pattern, and we could be seeing prices now starting to drop rapidly. So this is something to be on the lookout for. Then for the US 500, it seems like the market is really struggling to move downwards, especially considering that there is a psychological level being tested. So the psychological level on the S&P 500 is $5,000 per share, which is something that we have never seen before. So the only time that the market got close enough was yesterday's high, which was 4,999.83. And whenever there is a major strong resistance level, sometimes that level being psychological tends to act as a magnet price. So there is still a very strong potential that the S&P 500 will first hit the 5,000 price level before making any other move, and potentially judging from the Nasdaq as well as the Dow Jones, we could be seeing the S&P 500 top at around 5,000 before making a corrective. So from the daily time frame, you can see it has been a single direction story. The market making a very strong bullish momentum, but at some point we should be expecting some form of short selling. But for now, the bias is on the upside. I expect to see the S&P 500 closing above 5,000 before making a reversal. So oil prices have just behaved as expected. So we have been looking for bullish positions, and this has continued. So in the morning, we expected that the oil prices would continue and eventually get to a target of $80.325 per barrel. Then once the market price got there, there was an acceleration close through that level as if it was nothing. And now we are seeing a further acceleration to our previous high right here, which was the $81.416 per barrel, and the market is just about to get or to hit that level. So for European equity indices, we expected some form of reversal, and this was based on two trend lines. The two trend lines have not been broken yet. So in this case, the market remains within this rising wedge. So we still keep or continue monitoring these two trend lines. So in the morning, the market was testing the lower trend line. So we were expecting that at some level, the market would break and drop this area here. So there was no break. So we keep on monitoring until we see that break happening. So the break hasn't happened yet, but the current 1 hour candlestick is indicating a strong entry by sellers in what I would describe as a dark cloud cover. So a quick question to the listeners, what is a dark cloud cover? This is a question about chart patterns. So if you understand that, kindly text your reply on the comment section as we proceed with the presentation today. So Bitcoin managed to close through, continued to the bullish momentum as expected, eventually got to 5,500. So now in the late hours of this session, we are seeing some form of pullback, but still buyers remain that market may continue being bullish. So we had a target of 46,198, and the market hasn't hit that yet. So we still be patient and see what happens towards the end of the session. So for the French 40 index, we're expecting that the market would eventually break the lower trend line. This did not happen. The evaluation was that if the market closes lower, then we continue dropping and perhaps retest its previous low. But then, since the market rejected, I remember sending these on my personal Telegram group that we have a strong bounce, and eventually the market proceeded to move higher. But then the current 1 hour candlestick is now indicating a very strong reversal, and this seems to be happening across board. So with this kind of a pattern, it doesn't imply that you go for a short selling position straight up. What it means is that now the market has failed to form a higher high, which is a sign of weakness. And now the idea is now to look for trades in the opposite direction. So in this case, we observe the particular trend line here, the lower trend line that is extending from this bottom here, and look for signs that the market may break. So once it breaks, then that's when we should be looking for short selling positions. So for the US dollar trading against the Swiss franc, it has really struggled this week after making a break yesterday, pulled back to retest, and then continued to push higher. So yes, today we have a higher high as well as a higher low, but then this afternoon we have seen the market reverse. So the idea still remains the same. So from the 4-hour time frame, we know that the market has broken this trend line here. It has also broken this trend line, and now the buyers is that there's a potential rally on the books where the market could rally to the top of the pattern here at 0.88660. So it hasn't happened yet. Just remain patient and see what price action does allow around this trend line. So that's a summary of the things we discussed early in the morning during the market snapshot. And now we start and go through some of the key highlights that have happened over this day. We already have 3 responses on the comment section. A dark cloud cover is a candlestick pattern that shows a shift in momentum to the downside. Yes, but it's not very definitive. When it is moving in upward direction, let's see the other one. A bearish candle that opens higher and closes lower than the bullish previous candle. This is a little bit accurate from Malombe, but we have try to give it reasonable expectation or explanation. So I'll try and show you how it happens. So the way a dark cloud cover happens, and I know I've covered this previously in some sessions where I covered candlesticks. So I'll try and draw an arrow here representing price, and another one representing time. Then from there, I'll try and draw a random price chart. Sorry, not that what I'm looking for. So you have a market, let's say, moving like this. And then right at the top, what you should be expecting to see, when you are looking for a dark cloud cover. So I'll be starting with the first candlestick here. So often it will be green, candlestick moving upwards. So then on the next candlestick, you might notice something like this. So in this case, we have what I would describe as a dark cloud cover. So in the description, when you are trying to think of a dark cloud cover, so the first thing that you need to notice is that you will have an overall market direction that is bullish. So for you to identify, there has to be, first of all, a bullish direction, bullish momentum, so upwards trend. So the first candlestick will also be upwards. So notice in this candlestick, market opens low and closes higher. Then a small gap towards the upper side. So it's more of an exhaustion gap. And then after the gap, you notice that price reverses and moves in the opposite direction. So in this case, get the dark cloud cover kind of a candlestick formation, which is an indication of price reversal. So whenever you see this, then it's often a signal that the market now may be headed downwards. So it indicates a very strong entry by sellers and cause an exhaustion by buyers. So that's one thing you should consider, especially when you're trading a pattern that looks like a dark cloud cover. So trying to realize where we found it. Yeah. So in this case, the very first signal you need to understand is price was on an upward trajectory. So the second thing is that the first candlestick was green and the second candlestick was red. So in this case, we have a green candlestick where price pushed higher, a very big gap here, indicating an exhaustion of buying momentum. And immediately, price closes the gap and then covers the body of the previous candlestick, indicating a reversal of price. So often, if let's say the candlestick closes here, you expect the price to continue moving back downwards. So I'm hoping for those who are new to candlestick patterns, you understand this one and it provides value to you in your trading journey. When do you place pending orders? It's when you are expecting price to hit a certain or reverse or continue. So in that case, that's when you apply the pending orders rule. So I was talking about the key market highlights for the day. So we'll go through some of the top highlights. So I'll start with an article from Zero Hedge. Boys, markets do not want to sober up when they read the news. So there was a nice joke coming in from this article. So in one Laurel and Hardy film, the two are broke and agree to share a last drink at the bar. So Stan goes first and finishes the whole glass in one gulp. So Ollie, aghast, asks what's happened. Stan replies, well, my half was on the bottom. So it's a joke that basically talks about expectation versus reality. And this is deeply trying to question the current high valuations of US equities. And we keep on seeing a lot of these expectations. I expect The S&P 500 keep pushing higher, the Nasdaq keep pushing higher. But then we know that out of the 503 companies in the S&P 500, it's not all of them that are going up. It's only a few very strong companies that are gaining huge market valuations. One of them is NVIDIA, which recently hit $700 per share, and this was clearly unbelievable. If you look at the year-to-date performance since the beginning of the year, then you will notice that the stock has gained 45.95%. And this increase in valuation has pushed NVIDIA to a market valuation of 1.74 trillion. So the increase this year alone is just about $540 billion. So in comparison, if you do something like Tesla stock, you look at the market capitalization of Tesla, is somewhere around $598 billion. So just to think of it, today being the 8th of February, it means that the markets have only been active for what? I would say 39 days. And in 39 days, NVIDIA has gained almost a whole Tesla within those 39 days. So the real question is, has the company basically made over $500 billion within that short period of time, or has anything fundamentally changed about the company? So this brings on the point that markets are currently losing touch with fundamentals and becoming extremely speculative. So whenever you see such a scenario or incident in the market, then you should be very afraid, because markets tend to act out of extreme greed and eventually out of extreme panic. So when you see extreme greed in the market, which may explain strong rally in NVIDIA gaining 45.94% in just about a month, then we should be knowing that at some point, these prices will begin reversing. So if you look at the performance of NVIDIA over the last 1 year, yes, it's 116%. So at some point, if you look at the last 5 years, you notice, yes, there has been some growth. Yes, it has been gradual, but the price action since the beginning of this year is something to be concerned about, because often when you see something like this, like when it happened here, I think this was October, November in the year 2021, eventually there was some form of reversal that lasted a couple of months. So even in this case, it's nothing new. It's not like the company is making small profits just in 1 month. So at some point, we should be expecting some correction. Or in very human terms, we know that if you made 45% in the stock, and you know that's not something fundamental, and you just need the first 39 days of the year, then it makes sense to take home some profits. We always do that also in trading. So if there's a big spike in price after you have entered a position, sometimes it's good to take on some profit before you let some of the position to continue running. So the same case happens with equities. So in this case, we should be expecting to see some form of profit taking, and that should be happening across. So if only a small number of companies are driving the S&P 500 higher, and some of these companies start going back downwards, then in that case, you should also be expecting the S&P 500, the Nasdaq, as well as other top equity indices to start changing direction. And that's something you should be looking forward to. So shorting the Nasdaq, SP 500, and the Dow Jones is somewhere around the corner. You just have to be prepared enough to identify when sellers have entered the market. That is based on your own technical analysis. So the other key thing highlighted today was what happened with New York Community Bank. So New York Community Bank has been stressed so much because quite a significant amount of customer deposits are not insured, and the bank is exposed to commercial real estate. So as a result, we have seen the stock going down to record levels since the beginning of the year. So since the year started, the bank is down 58%. Earlier on in the day, it was down 60%. And this is quite concerning because there's a good probability that the bank might be headed for a collapse. So these are levels that we have not seen in years. So the last time the bank was trading at the current price level was all the way back to around the year 2000. So the bank is trading at a much lower valuation than the lowest price we saw during the financial market crisis of 2007 to 2008. So in 2007 to 2008, this was the lowest level we saw. And now what we are seeing is much lower. So the lowest price we saw in 2009 was $7.99 per share. Right now, we are looking at $4.34 per share. So this means that there is a good likelihood that the bank may be headed for a receivership. Customers might be withdrawing their money at the impression of the bank, and we could be seeing the bank headed lower for the rest of the week, and perhaps even the next week before the eventual potential. I'm not saying it's going to happen, but this is the biggest sign that you'll see if a bank is collapsing. So being down 58% in a span of 39 days of the first 39 days of the year, then this basically spells trouble for the bank. So in fact, this big drop hasn't happened in the past 39 days. The first drop started on the 30th of January. So this literally has happened in a week. So within a week's period, the stock has moved from literally $10 to $4.34. At the beginning of the year, it was 10.41. Then that till January, 10.38. So it had maintained the same level. Then in 1 week, we see this big drop. So that's something you might be concerned about. And then we move on to the next part of the article. This was comments that happened earlier this morning from the Bank of Japan Deputy Governor Uchida. So he basically said the Bank of Japan would aggressively hike rates after ending the NIRP, which is basically the quantitative easing program that the Bank of Japan has been implementing. So key questions were answered in the speech. One, is the Bank of Japan going to hike interest rates in the near term? So they basically mentioned that they are not going to hike interest rates in the near term. Then the Bank of Japan will first improve the basic quantitative easing program. And this is similar with what happened with the US. So back in 2022, this is when the Federal Reserve Bank of the US decided to start hiking interest rates in March. But then before that happened, the US Federal Reserve had to cut its quantitative easing program, and it was reducing this by about 120 billion per month until they wound it down to zero. Then they started hiking interest rates. So in this case, we are looking at the potential repeat of the same approach. So the Bank of Japan keeps moving the quantitative easing program, and once it's back down to near zero, then at that point, they consider hiking rates. So the only key difference is that the Bank of Japan will not be going for bit by bit rate hikes like we have seen in the US. In this case, we're expecting just one big rate hike, and the interest rates stay at that level. So as after the announcement of the news early this morning, it led to two key market developments. So one was a very strong weakness in Japanese yen pairs. So as a result, and I covered this in the morning, there was a very strong rally in USD JPY, and we have managed to break above this resistance. And we know that the highest price that we have seen in years has been this level, and it was the same level last year, in 2022. So this is 2023, this is 2022, and now the market is headed back to the same level. So unless something changes in the market, maybe something like a Bank of Japan intervention, then the overall expectation is that the USD yen continues to rally towards this point. So on the other hand, knowing that the current quantitative easing program might continue for a while, then we had a speculation here on the Nikkei 225 index. So on the platform, it's JP225. Here we expected a continuation of the same. So the market closed above this resistance. You can see the previous high, pulled back downwards, and now is moving yet again. And I expect to see a continuation of this momentum higher as traders continue betting on a strong Japanese economy. So the strong Japanese economy is mainly being backed by an age of easy money, where interest rates are significantly low and quantitative easing is still continuing. So as a result, stocks continue to benefit from this. So at the same time, for Japanese exports, they are of high demand because the currency has been devalued. So whenever a currency goes down in value, that is in terms of exchange rates, then the products from that country become quite attractive. So in this case, Japan is exporting more products, mainly because its currency has been devalued, and this is benefiting Japanese companies. So this bullish momentum is expected to continue. And as you can see, since the beginning of the year, we started here, all we have been seeing is bullish momentum. And after trading in this triangle for just about 3 weeks, now we have a breakout towards the upper side. And an expectation of further upside momentum is within reasonable expectation. So other key highlights, the Reserve Bank of India held its benchmark policy repo at 6.5% for the 6th consecutive meeting in February 2024, that was today, as widely expected amid persistent price pressures. So the latest move came after annual inflation accelerated to a 4-month high of 5.69% in December due to rising food prices, but stayed within the RBI's 2 to 6% target range in the medium term. So another key highlight in this case, jobless claims. This was the biggest news of the day. So the number of people claiming unemployment benefits in the US fell by 9,000 to 218,000 from the prior week's upwardly revised value in the February 2nd report, slightly below estimates of 220,000, but remaining firmly above the average from the last 2 months. So a drop in the number of jobless claims means that the job market conditions are currently very tight. So jobless claims are basically people who are filing for unemployment insurance last time. When you track this number, you can tell the trends in the job market sector. So if things are really bad, and I think I covered this earlier, you will identify periods when jobless claims can really go up. So for instance, when the US announced an economic shutdown during COVID in March 2020, jobless claims skyrocketed because there were no new jobs being created. But then this has significantly toned down. And as long as these jobless claims continue reducing, it's an indication of how tight the labor market is, because everyone can easily find a job, then nobody is going for unemployment insurance. So as a result, this is a key factor or key indicator that the Federal Reserve Bank of the US observes while it's taking decision on interest rates. And as we know, the Fed has been looking to cut interest rates at some point this year. But then they are also observing the economy. Remember, they changed policy to what they called the data-driven approach. So with this in mind, we know that they are looking for the job market conditions to ease. And by easing, they want to see higher unemployment rates. They want to see higher jobless claims and lower wages. But that is not happening. And that may explain the Fed's comments when the Fed chair said on Monday that it's unlikely that the Fed will be cutting rates in March. So the next meeting by the Fed will be in March, the 20th. And now the markets are pricing in a much higher probability the Fed will not be cutting interest rates. So that's one of the key considerations in the market today. So if you look at the 30-day Fed funds futures chart, then you will notice that it's pricing in a probability of 81.5% that the Fed will hold interest rates at the current level. So remember, the probability for a rate cut was up at 70% at the beginning of the year, and now it has gone down 18.5%. So in addition to this, we have seen other Fed members presenting speeches. One of the speeches that we saw today was from Fed member Barkin, when he was asked about Powell's comments last week on a possible March rate cut. Then he basically said that Fed Chair Jerome Powell always speaks for the committee, meaning that he's backing the Fed members' sentiment that an early rate cut in March is highly improbable, and this is pretty bullish for the dollar. So going forward, we should be expecting to see the dollar index continue to push higher, and if that happens, then that represents a potential to continue extending the current trends. So from the dollar index here, you can see the pullback, but then the overall expectation is that at some point, the US dollar index will continue strengthening. And as soon as it continues strengthening, then we expect to see an extension of these trends. So even if there was a slight pullback in USDN, I expect to see a continuation. And also for Euro USD, which has the heaviest weight on the dollar index, it has bounced quite strongly, but I still expect to see some further downside momentum. So in this case, if you compare today's price action versus yesterday, we broke the yesterday's low and we still broke the yesterday's high. So the price might cross somewhere in between today's high and low. But then as we head into tomorrow, a potential drop would be in the books. So the same case happens to the pound. You can see the new low that we saw today, but we didn't have a new high compared to yesterday. And as a result, it's assumed that we could still be having some form of bearish momentum. So if you zoom on the daily candlestick, this is indicative of an attempt to push prices further back downwards. So 2 days bullish, the bullish momentum ends. There's an attempt to push prices down which seemingly failed today. But then tomorrow is yet another day, and we observe the markets for a potential drop. So also for the USD card after this pullback, maybe it's a retest of this particular trend line. Then we see a continuation still towards a target of this area. So for gold traders, we are seeing a strong bounce here, but then the market hasn't gone above the open of the day. So there's still more room for speculation that gold prices may eventually drop towards the lower side. So also on the 4-hour time frame, you should still be conscious of the fact that the market has remained within the triangle. And as we mentioned during the market snapshot, while all this noise may be happening within the triangle, the real key indicator for momentum is when either gold breaks this particular trend line, when it breaks the lower trend line. And from what we are seeing, there's indications showing that the dollar is very strong and could potentially break towards the lower side. So that's it for the day. And thank you very much, everyone. Thank you for taking your time to listen in. So before we end the session, remember, there's a new episode of the Rich Banter podcast. So make sure to listen in and respond with what you think. We appreciate all the feedback you can share. And if you haven't liked and subscribed the channel, make sure to do it. As well as for this video, you have to make sure that every other person, every other trader who might benefit from this easily finds it. Just give it a like, and I will appreciate this. Thank you very much, guys. See you then.